And we're going to have a look at the accounting equation. So remember, when you are doing the accounting equation, your first thing is to identify the accounts involved within the transaction. Once you have the accounts, you are going to classify them and you're going to say, this is going to affect my assets, or it's going to affect my owner's equity or then liabilities. And based on that, you will then determine whether you are going to debit or credit the account. So you have to study when something is going to increase on the debit side and when it's going to increase on the credit side. So first transaction here is that the owner increased his capital. So because it is the accounting equation, you don't need the source documents or any further information. You just need to know what happened and how much that transaction, did we receive money or did we pay money? So how much was involved there? So the owner increased their capital, meaning that the owner gave the business money. And remember that we are always doing this from the business's perspective. And they are saying that the business received 225,000 Rand from the owner. The reason why the business received it is because the owner increased their capital. So whenever the business receives money, it means that we have more in bank. And bank is an asset. Assets increase on the debit side. That is why we will debit bank. The reason why we are receiving this money is because of capital that the owner is now contributing. So capital is owner's equity, and owner's equity increases on the credit side with the amount. So you have more assets, more bank, more capital, therefore more owner's equity, and there were no liabilities involved in this transaction, so no liabilities there. Then the business replenishes its trading stock. So in other words, the business purchased trading stock. It did not say that the business paid for it, but because you haven't yet done creditors at this point, you have to assume that all your purchases are cash purchases. That will change next term. But for now, all purchases are cash purchases. So in other words, you paid for something. Therefore, you have less money. Money is bank. Bank is an asset. If the asset increases on the debit side and you now have less, then it means that it decreases, so it will decrease on the credit side. The reason why you have less money is because you purchased trading stock. So you now have more trading stock. Trading stock is also an asset. So you now have more assets, so you debit your trading stock. And the amount is 100,000. So you have more assets because you have more trading stock. However, you also have less assets because you have less money. No owner's equity, no liabilities. Then you purchase stationery, and remember we now said we're going to say and paid. So you purchase and paid for stationery to the value of 750 Rand. So whenever you pay, you have less money. So credit that asset. What did you buy? You purchased stationery. Stationery is an expense, and expenses increase on the debit side. The amount that you paid was 750. So you have less assets because you have less money in your bank. Then stationery is an expense. Expenses decrease our profits. All profits go to the owner. So if you now have less profits going to the owner, it means that you have less owner's equity. Then late payment is made to the municipality for water and electricity. You don't care if it's late or not, you have to record it in your books. So you made payment once again. So you once again have less money in your bank. The reason why you have less money is because you paid this water and electricity account. So water and electricity is an expense. Remember, you don't own the municipality electricity. There we go. You don't own the municipality or ESCOM when you're making this payment. You're only making payment for what you have used. Once you have used that, you have to buy again. So that's why it's not an asset. Remember, an asset is something that we own. until we decide to let go of it, to sell it to someone else. So you have less money in your bank, therefore less assets, more expenses, therefore less profits going to the owner, and that's why we decrease our owner's equity. Then on the 8th, we paid each one of our 15 casual staff, we paid each of them 800 Rand. So we paid in total 12,000 Rand to our employees. They are casuals, so we will say that they are wages. You don't own your staff members, they are expenses, and expenses increase on the debit side. You have less money in your bank account, 12,000 Rand. So less money, therefore less assets, more expenses equals less profits, therefore less owner's equity. Then the business makes an EFT to Telkom for the owner's account. Remember, if it's a business expense to Telkom, then it would have been telephone. But in this case, it was made on behalf of the owner. And whenever we pay something on behalf of the owner, that is drawings. Drawings will decrease my owner's equity, and that is why it will get a debit entry. So the more drawings I have, the less owner's equity I have. That's why it's a debit. And I made payment, therefore I credit bank, because now I have less of that asset and less owner's equity, no liabilities affected there. Okay, so for owner's equity, it will increase whenever the owner contributes capital, or the more income we have, because now the owner can get more profits. It will decrease when the owner starts taking the money in the form of drawings, or then if we have expenses that decrease our profits. Next up, interest of 1,500 Rand is earned on our investment account. So in other words, we received interest on our investments. So we have more money in our bank account. So we're going to debit bank, and we are going to credit interest on investment. And the amount that we received is 1,500. So I have more assets, more money, more bank, and I have more income because I received interest. So no liabilities affected there. Then on the 15th, monthly salaries are debited from the business's bank account. So in other words, you now paid your salaried employees. So you made a payment, therefore you have less money. You now have more of the salary expense. So salaries gets the debit because expenses increase on the debit side. We credit bank because we have less of that asset, and the amount is 50,000. So I have less assets, I have less profits going to the owner, and no liabilities affected there either. Okay, we move on. Don't worry, I'm not going to do all of them because it's a lot of repetitive stuff going on here. Okay, so total sales for the day were deposited into our bank account. So we now, as a business, received money. Therefore, we have more money, more bank, debit bank. The reason why we have more money is because we sold goods. So the reason for more money is sales. And the amount that we received was 40,000 Rand. So I have more bank and more profits going to the owner, no liabilities there. However, I know that I cannot not have the sale without letting go of my trading stock. So I no longer have the trading stock. Therefore, I will credit trading stock, because that trading stock has now become the cost that I had to incur in order for the sales transaction to take place. So I debit cost of sales, and cost is fixed at 25%. So I'm working with the sales. I want the cost. So I want the 100. I'm working with the 125. So the goods cost me 32,000 Rand, and I sold it for 40,000. So I have less trading stock, therefore less assets. I have more expenses, cost of sales, therefore less profits going to the owner. No liabilities again. Equipment was replaced to the value of 15,000 Rand. So in other words, you purchased equipment for 15,000 Rand. So you have more equipment asset less money because you purchased the asset for 15,000 Rand. So you have more equipment, but you have less bank, therefore plus minus for your assets. Then you received a late payment from a tenant. So you have someone who's renting your property and they made payment to you. So you received money, therefore debit the asset bank. Why? Because of rent income. Income accounts increase on the credit side. So you have more money, therefore more assets, more income, therefore more profits going to the owner. Then a debit order went off our bank account for our insurance, 3,000 Rand. So you have less money, therefore you're going to credit bank. Insurance is one of those things that you pay on a monthly basis, but you never own anything. So it's an expense, and expenses increase on the debit side, 3,000 Rand. So you have less money, therefore less assets, more expenses, therefore less profits going to the owner. Then sales for the day was 60,000. They didn't tell us that we received the money for the sale. Therefore, it is a credit sale, which means that my debtors now owe me more money. So my debtors owe me more. Debtors are assets, therefore we debit the asset. Why do they owe me more? Because of the sales of 60,000. So my debtors are assets, therefore assets are increasing. Sales is income, and that means that the owner will get more profits, no liabilities affected there. However, I know that I cannot have sales without cost of sales because trading stock is leaving my business. So I have more cost of sales expense, less trading stock. So remember, they said a fixed markup of 25% applies. So 60,000 Rand times 100 to find my cost, divided by 120 because I'm working with my selling price, so 48,000. So I have less trading stock, therefore less assets, more expenses, meaning less profits for the owner, and no liabilities affected there. So that's just a quick accounting equation.